welcome to Finding Your Mojo in a Fireside chat with Andrew Holland, CEO of Alternative Investments at Avendus. Andrew, hi, thanks for joining in. Andrew, this conversation really is geared towards financial independence, financial freedom, finding a mojo when you talk about financial freedom in your early 40s or maybe even your mid 40s to early 50s, which is, of course, a talking point amongst a lot of millennials. I want to start with one space that a lot of youngsters are seeming to talk about and is drawing quite a bit of attention from that sector or segment of the society is ESG funds. Most of these youngsters are geared and cued towards, doing it the right way or doing the right thing for the environment, social causes. What is ESG funds? And if you can just give us a sense about what they are, how does one go about investing in them as well?
Yeah, so there's ESG or environmental, social and governance funds have been around for quite a number of years now. And if you look globally, there's something like $30 to $35 trillion of ESG kind of focused funds there. And basically, what you're trying to do there is a number of things. It's one, have companies which have strong corporate governance, also look after the environmental aspects, and obviously social causes as well. So, I first came across this many years back. There's a tea company in India, who was doing very well. And then the BBC came out with a report saying that they were employing underage children, and they actually kind of filmed it. And this obviously went viral at the time. And this is like, I would have thought maybe 10 years ago. It's a long time ago. After that, all the suppliers, the buyers, all the chain that was, kind of feeding into this company or buying from this company stopped straight away. Share price collapsed. And so that's how I got into ESG and the impact it can have on share prices and companies in terms of their governance or their social aspects or environmental aspects. For example, I think POSCO which is a steel company in Korea, just had to give up any association in Myanmar because of what's happening there. Because of shareholder, pressure to cut all ties with that country. So these things are happening more and more, and obviously investors are becoming more active in what they want to do and what they expect their companies to do in terms of ESG compliance.
Right, Andrew. So while ESG funds aim to find sustainable businesses that are not only environmentally and socially responsible, but also make a good investment tool, what about returns? If are returns compromised because because it's sustainable investing, or returns are market competitive?
Yeah, no, they have actually shown to outperform globally. And in India as well. Let me give you two good examples of more recent times. So if you take, since COVID and what's been happening, if you look at a chart of, in the US that is, of renewable companies, energy, you'll see the share prices going like that as a sector. If you take oil companies, you'll see the share prices going like that. So complete opposite. So renewable energy, share prices going up, oil companies' prices going down. If you look more closer to home and just take two companies, Hindustan Unilever and ITC, you'll see exactly that same pattern. Hindustan Unilever going higher and ITC going lower because of their involvement in tobacco.
Andrew, how does one go about identifying ESG funds? Is it through the mutual fund route? It's also fairly easy, I'm assuming, to identify companies that do sustainable investments or are more environmentally friendly than others in the direct equity space. So what is your advice? If somebody is socially conscious, how should one do this?
So if we're talking about India, there's quite a number of mutual funds, as you've said, and Avendus has actually been at the forefront of ESG funds. So we have a fund as well. We were the first to launch. But that aside, I think what you have to do now is try and look at each of the funds independently and say, what are they doing? So you can get scores for companies. You can score them on the environmental, social, and governance. And that's the first part of it. The next part, obviously, is then looking at the fundamentals of the company. But I think the real crux of this is to go into more detail about what the company is doing in terms of all of these elements, to get, move the company forward on an ESG compliance angle, because a lot of them, I hate to say this, are just showing in their reporting accounts that they're doing something about it, but have they really put a lot of women on the board? What is their criteria for that to happen? When will it happen? So those are the deeper questions funds will have to ask more and more, and I think that's where the investor, when looking at ESG funds, need to ask those kind of questions. What more are you doing, to analyze these companies than just a score, which you can get from many providers like MSCI. You can get the scoring from them, but it's a deeper dive that you need to do into these companies and management, and ask the right questions.
Right, that's of course all about ESG. Also, Andrew, are there any other ways to invest responsibly apart from funds branded as ESG?
I mean, obviously you can look at it individually yourself, and identify those sectors and companies which you believe will continue to be on the. So I would the kind of IT sector would be a very clean corporate governance, socially responsible, obviously not affecting the environment. But that said, if you take TCS for example, you'd have to ask them about, because of where they're based, what's their plans for water management, because all of these things will impact them at some point. So all of these questions still need to be asked. But I think at the moment, because it's still at a nascent stage in India, I would probably go through the funds route rather than individually, because you'll have to do a lot of work and you might not get access to the companies to ask these kind of questions unless you go to the AGM.
Right. Andrew, I want to move to another asset class, which again has sparked a lot of attention since 2017. And I'm talking about cryptocurrencies, right? What is the dizzy Bitcoin price rise all about? Is it time to get rich or is it time to get out? I know it's an asset class that has caught most of us by surprise.
Yeah, I must make a disclosure that I do hold Bitcoin, so that's the first thing I need to do. The reason I looked at Bitcoins some years back was because of the audience you're talking to now, the millennials, which will have a different way of thinking in terms of how they want to buy goods and services going forward. And Bitcoin was a good alternative for that. And what we're seeing now is that there's a wider acceptance by companies and exchanges around the world. I think the next step though would be this, and it's very simple, is that if I wanted to buy something from you, would you accept a Bitcoin from me? Given the volatility that you're seeing in the price, would you be happy to accept Bitcoins at the moment? So I think it still has more maturity yet, but I think what most people are saying is that given all the debt around the world, that the dollar will devalue at some point, and other countries' currencies, and therefore it's seen as a hedge against that. And gold doesn't seem to be an effective hedge against inflation at the moment, as we've seen more recently with the price of gold falling from their highs. So this is where Bitcoin's getting more acceptance from the mainstream, not just young millennials. It's from the mainstream now in terms of it can be used going forward. But as with all alternative assets, you need to kind of say how much of my wallet do I want to put towards alternatives. It's usually between 10 to 20%, but then within that, let's say it's 10%, there's many different aspects. There's hedge funds, there's art, there's wine, there's Bitcoin. So you have to look at what exposure you want to higher risk.
And how much do you recommend to millennials who aim to retire early in life? It's all about multiple streams of income, investing for the long term, investing in some amount of risk, and hence equity sort of shows up on that list of ideas or assets to be investing in. Along with that, also alternatives. That's another space that has the potential to give you multiple returns. You threw some light about Bitcoin. Tell us about the other alternatives that one can look at, private equity, VC, fund of funds. That's something that's become very popular recently. Even art, like you mentioned, right? All of this has the ability, if it's well timed and you're lucky rather, to make you big bucks and of course then help you retire early. Share some thoughts with us on that too.
Yeah, I mean, it depends on obviously your risk appetite for that. I would say that the 80 to 90% of your funds should still be in your kind of traditional equity, debt, real estate would be the main three. I think at the end of the day, it's all about your opportunity cost, right? I know that a lot of people talk to me and say it's not about timing the market, it's time in the market. Now that's all very well, but if you would have been in the market for the last 3 years, you would have made hardly any money, right? Whereas the opportunity cost might have been elsewhere. You could have gone into real estate, or you could have gone into other assets, which would have given you a better return than you have on the index. So it's all about your opportunity cost. But let's just say you earmark 20% for other assets. Then I think a combination of what you've said in terms of private equity. Private equity, though, in what area? I think everyone wants to be involved in the startup arena, but again, it's a very difficult space. You got to know a lot of people and companies and meet them. Whereas there are some funds now which you can invest in, which will invest for you. So that's probably the best way to participate in some of these early venture capital companies. So that's the route I would go down. I would. Art and wine is more selective because you've got to really know that subject, I think, rather than just put money towards funds or have your enthusiasm has to be there to want to be involved. And obviously hedge funds would be the final one, which would give you better returns on the market over time. But again, that's still very nascent in India at this moment.
So Andrew, would it be fair to assume that alternative asset classes are actually for the rich? If you still sort of got your goals to fulfill, you're still in your early years of your career, where your corpus may not be as large, what you're really trying to do is achieve that corpus eventually in life. What would you say? Would you say that stay away from alternatives because you can do that when you've achieved what you want in life? Or would you say use this as an instrument to achieve those goals?
I think you can still achieve those goals because if you take, say, Bitcoin, for example, you don't have to buy just one Bitcoin, which will cost you, 50 lakhs. You can buy fractions of it, on a regular basis, like a SIP. You can just keep that doing. So you can build up over time. So there are ways to do this. But obviously, the more kind of selective type funds like art funds or wine funds, you would have to put in a reasonable corpus, but then you can actually buy the wine directly as well, and just have it
consume it as well,
and consume it after some time, so you can enjoy it. Hopefully get some good investment from it. But what I'm trying to say is that you should earmark some. It doesn't have to be a vessel. You don't have to kind of be super rich to do this. You can do it. I mean, we've all seen what's happened with GameStop in the US, right?
Yes.
In terms of what happened there. So, if you would have bought some shares early on, you would have made quite a strong return over that time. So as long as you have money which you can earmark, which is a bit more risky, which can take that kind of risk, then I would say there's many avenues that you can go down. You don't have to just say, I'll wait till I've accumulated so much wealth.
Right. Well, very lastly, I'll try and slip in one quick question. So all these aspirations for retire early, what are your closing remarks? Any advice that you want to give to youngsters who are watching us as we speak?
Yeah, I mean, we all want to. I mean, we'd all like to kind of retire early, and that's a great thing. But I would say that, in terms of your investments, don't risk, don't leverage is one thing I would say, because that's where you can come into, serious problems if markets fall or, alternative assets, take a hit, like we've just seen with Bitcoin fell, 15, 16% the other day. If you're leveraged into that would cause you a problem, because you might have to obviously, liquidate other assets. So earmark what you can afford to lose on your alternative assets, and keep your core into your normal kind of debt, equity, and real estate, because those are the building blocks anyway for your future. Everyone wants to have a house, I would hope. Although I believe millennials are more happy kind of renting, so less so. But I have noticed that in the UK and the US more recently, millennials have been the ones who have been buying houses.
Oh, really? Yeah,
Yes.
so I think there's clearly a change in the way the 20-year-olds are currently thinking. But it's always a pleasure talking to you, Andrew. Thanks for the perspective, really helpful. So stick the course, stick with the process. You will, of course, achieve your goals in life. And money that you can sort of lose should be allocated towards alternatives like private equity and, of course, Bitcoin. Great talking to you, Andrew. Thanks for joining in.
Thank you so much.